All right, good morning. Let's go over today's trade plan. So in the overnight session, we got liquidation from the 92 resistance and failed and came all the way back down to the 75 to 77 support, which is pretty surprising. I didn't expect that big of a reversal or a pullback in the overnight session. At yesterday's recap, the idea was that if we pulled back towards even the 79 to 81 or 83 even, that level would hold and would be a great buy in the overnight session. But, we saw that the market just sliced right through all that and liquidated down to the 75 to 77. And, if you look at the overnight profile, that's exactly what that indicates. It's a long liquidation profile. So, right now, heading into the session, we're going to continue using this 75 to 77 area as a key support area, and that's why it's marked as the bull bear zone for today. And we're going to use it to establish our directional bias off the open. Now, because we've liquidated and now balanced in a range, we can get a little bit of continuation of that into the open. So, off the open, you might get a decent move to the upside, but that move does not necessarily have to stick. And that's why, we will look for short setups on any pops into resistance. We have pre-market resistance 82.5 to 84.5. That's a decent area to enter a short, but if we have a lot of momentum behind a move, which, we're seeing in this market where, it's high momentum up and then high momentum down, then we may just get some rotation there and not like an all-out failure. Because if we get a really high momentum push outside of this short-term overnight balance to the upside, then we can test the 86.75 VPOC and then get a better rotation. But even at the 82.5 to 84.5, we will consider a short setup on first test. It's a valid resistance zone, and given the level of volatility in this market, what you're going to start seeing is that even the zones that don't necessarily hold for too long are going to start providing pretty decent rotations, right? Like a couple of weeks ago, we were in this kind of slow, kind of a grind type market where we would go lower and then we'd slowly go back up, and it was a difficult market to trade. But I think with the expanded volatility, even the zones that don't work are going to start providing us with 3.5 point rotations. So, it's going to make sense to take a trade at majority of the zones. Of course, if, the intraday context doesn't support it, we're not going to just blindly step in. It's not about blindly fading every support resistance zone. It has to be in line with kind of what's happening on the day time frame. Kind of how yesterday, we skipped the pre-market resistance zone and didn't actually short at all, right? So it has to be in line with what the market's telling you on the day time frame, but overall, bigger picture, kind of the theme of the market and the environment we're in or we're heading into, it looks to be shaping up to be an environment suited for day trading, and this is something I've mentioned in the recent couple of videos as well. So we will look for short setups on pops into resistance, and in the event of a failure below 75 to 77, we can quite easily get a move down, a continued liquidation down to 69 to 71, and over there, it's not a spot where it necessarily has to shut off the selling, right? It can just provide a rotation, and then the market can continue lower to test the Monday low, 66.75, and more than likely the 63 quarter to 65 quarter zone would be in play at that point. So we will have to gauge the bounce off initial support. In order for that bounce to really stick, the market would have to get back above 75. And based on how the market is shaping right now, it looks to be that if it fails 75 and goes down to initial support, that first bounce back up towards 74, 75 is probably going to be a shorting setup. where we can short the market and look for a retest of the lows, or a continuation lower to that 66 area, or the 63 quarter, 65 quarter zone. Now, those support zones, I still expect responsive buyers to be active. We'll be a bit cautious at the 63 quarter, 65 quarter, because we have that key gap right below it. But there's support at 60 half, 62 half is a very key gap. It started, a major upside move, so I do expect buyers to be active down there. In the event that we do sell off to 57 half, 59 half, I mean, especially first time down, that area is very good support and pretty much an automatic buy. So, we'll be a little bit careful at 63 quarter to 65 quarter. Can still get some level of rotation there, but really the big level down there is going to be around 60 half or 62 half. And, those zones, kind of that area near 60, does have potential to shut off the selling and result in a bounce back up towards the 69 to 71 zone. So the reward to risk is very good down there, and that is a trade that we will consider on first test. But right off the open, the 75 to 77 zone is going to be key. Keep an eye on the overnight VPOC, because the first sign of a potential reversal to the upside is going to be price holding above the overnight VPOC, which I think right now is around 77, 78 anyway. So, the bull bear zone can pretty much take care of that and give you a good read. But, if you're watching the other markets, I mean, they're all basically in the same mode now, they all liquidated overnight, and they're all kind of chopping around their respective overnight VPOCs right now, with TF showing a little bit more strength than the other markets, but that has been the case anyway throughout this entire recent balance, where the other markets have been a bit stronger. So I think they will recover earlier, or in a kind of make a bigger move if they do recover here. So keep an eye on that as well. The 75, 77 key zone, and we don't want to get caught shorting at too low of a price, and then get caught in a choppy type environment, or an environment where we do get a decent upside move and just take an unnecessary loss. So we are going to wait for good inflection points to enter the trade. With this level of volatility, I mean, if you can even nail two good setups on the day time frame, that can be a pretty decent day. So we are going to be selective and wait for inflection point trades. Just because there might be a market view, like the market's heading lower, for example, doesn't mean that we can just enter at a very aggressive price and then use an extremely wide stop. We still want to use a relatively tight stop, 2.3 points, not really too much wider than that, and look for at least 5 to 6 points on the setup, and that can be used as a filter. So if you're looking to get into a trade and you think it only has 2 or 3 points in it, then that's something you can just skip and wait for kind of that ideal setup that can give you 5 to 7 point bounce or more, or a 5 to 7 point rotation lower. So those are the main ideas heading into the day. Let's see how this overnight VPOC in 75, 77 plays out, and then that'll give us a good read, and then see if we can get some selling on the upside, and if we break, we'll look for some buyers to step in at support.